Hello everyone. Welcome to the session on VAT in Tally.ERP9, Release 5.1. The agenda of the session is as shown. The two big questions for a business are, is the tax return reconciled with transactions, and, is the correct tax being paid to the government? If returns are reconciled with transactions, and the correct tax is paid, it is business as usual, no problem. But, if there are errors in the returns, or if the incorrect tax is paid to the government, there are penalties, fines, etc. Typically, every business would want to ensure that returns reflect books accurately. The tax returns must reflect the underlying transactions accurately. This is a basic requirement. The figures in the tax ledgers and the tax returns cannot be different. Tax payments are accurate. To ensure that returns are accurate and tax payments are correct, transactions must be entered correctly as per VAT rules. Errors be identified and corrected easily. Errors may occur. It is important that the software being used has a simple, accurate and fast way of highlighting potential errors, so that timely corrections can be done, preferably before filing the returns. Simple to set up and start. Every business wants taxes managed in a simple manner. The initial setup has to be minimal, and should take just a few minutes, with no requirement for expertise. Let us see how Release 5.1 addresses all these requirements and makes managing VAT extremely simple. Here's how a first-time user can easily set up VAT and start using Release 5.1 in minutes. Let's take a simple business scenario where a company deals only in one type of product, deals only with local sales, and all the products have a single VAT rate.
Let's create a company to demonstrate VAT. Let's enter the company name. And let's select Karnataka from the list of states. Click F11 Features, Statutory and Taxation. Set the option Enable Value Added Tax VAT to Yes. Enable Set Alter VAT Details. Enter a valid TIN. Enable the option Set or Alter Tax or Rate Details. Enter the VAT rate and save the screen. Let's save the company VAT details screen. Now let's create a few ledgers. Let's create a party ledger. While creating a party ledger, the state is automatically selected and set to the same selection chosen when creating the company, in this case, Karnataka. Let's create a sales ledger and a ledger for VAT. Select VAT as a type of duty or tax and save the ledger creation screen. Let's create a few stock items. The first stock item is a cricket bat, and we will create a group called Sports Equipment under which this item can be grouped. Like we all know, I just pressed Alt-C on my keyboard to create a stock group on the fly. Let's save the screen and also create a unit of measurement. The second stock item is a cricket ball grouped under Sports Equipment. And finally, the third stock item is a t-shirt, for which we will create a new group called Sports Apparel. Now let's record a sales transaction with all the items that we just created. Select the party ledger, select the sales ledger, and select all the items. Enter the quantity and the rate. Stock item number 2. Now click A, Tax Analysis. As you can see, the tax is calculated automatically based on the rate specified at the company level, which is 5%. Let's select the VAT ledger and save the voucher. Let's do a quick recap of how Release 5.1 handles a simple environment in a simple manner.
As we've just seen, it is very easy to record tax transactions. Simply enable VAT at the company level, define the applicable rate, create normal ledgers and stock items, then pass transactions, and see VAT auto-calculated. If the VAT rate changes, you can directly change it at the company level. There is absolutely no need to wait for Tally Solutions to provide a stat release. Of course, if forms are changed, they will be available through Tally Solutions via capsules. So as benefits, setting up VAT in Release 5.1 is a single-step process. It can be done in minutes, if not seconds. Because of this simple and quick setup, sales calls can be closed very quickly. Now, imagine how many more calls you will be able to make, and therefore, how many more sales this will translate to. No expert's knowledge is required to record VAT transactions and generate returns in Tally. Better yet, with minimum support, customers can now record error-free transactions. Now, let's take another scenario. Interstate sales is a very common business scenario where the goods are locally produced or purchased by the business and is sold to customers in other states. Let us see how Release 5.1 has simplified handling of interstate sales.
Click F11 Features, Statutory and Taxation. Enable Set Alter VAT Details. Enable Set Alter Tax or Rate Details. Click F12 Configure. Here, set the option Enable CST Rate Details to Yes. As you can see, CST is displayed as 2%. This means that if the invoice is against a C form, a VAT rate of 2% will be charged, else it will be charged at the local rate, that is 5%. Save the company VAT details screen. Let's record a sales transaction to a party located in a different state, say for example, Tamil Nadu. Let's create a party ledger. Select the state and save the ledger creation screen. Now let's record a sales transaction. Select the party. In the party details screen, enable the option Is Against C form. Back in the voucher creation screen, select the sales ledger. Select the stock item, enter the quantity and the rate. Let's select another stock item. Click A, Tax Analysis. As we can see, 2% is the tax rate which is being calculated for this interstate sales transaction against a Form C. In the voucher creation screen, let's select a CST ledger. Set the option Provide VAT Details to Yes. Provide the necessary details on the screen and save it. Save the voucher. Now let's do a quick recap of Release 5.1's highlights for managing interstate sales transactions.
As we've seen in the demo, you just need to enable CST at the company level, and based on the state in which the customer is located, CST is calculated automatically. No further configuration needs to be done. This simplicity ensures that the business is able to implement CST and enter their first invoice in minutes. This also ensures that chances of errors are reduced considerably. When you purchase from an unregistered dealer, all you need to do is mark the supplier as unregistered in the ledger master.
Let's create a party master. Enable Set Alter VAT Details. Select Unregistered as the type of dealer.
Now, let us take up a fairly complex scenario, wherein a business deals with multiple products, and each item has a different VAT rate. Let's see how Release 5.1 handles this smoothly.
Click Statutory and Taxation. Enable Set or Alter VAT Details. And enable the option Define VAT, Commodity and Tax Details as Masters. This option needs to be enabled for creating any kind of VAT classifications. Enable it and save the screen. We will now create two VAT classifications, one for 5% and another for 12%. Go to Accounts Info, Statutory Info, and click VAT Classifications. Let's create the first VAT classification, that is VAT at 5%. Enter the date from which this new VAT classification would be applicable. Enter the rate, that is 5%. Notice that as soon as we entered 5% under tax rate, the taxability changed to taxable. Let's save this classification and create the next one for 12%. Now we will alter stock groups sports equipment and sports apparel and tag it to these two new VAT classifications that we just created. Select the group sports equipment. Enable Set Alter VAT Details. Select the VAT classification that was just created. Select VAT at 5%. If required, the date from which this new VAT classification is applicable can be specified here. Similarly, let's tag Sports Apparel Group to the new VAT classification, which is VAT at 12%. Now let's record a sales transaction. Select the party and the sales ledger, and select stock items from the two new VAT classifications that were created. Select the second stock item. Press A, Tax Analysis. The different VAT rates being charged on each stock item is displayed. This is another example of Tally simplicity, with which it deals with different VAT rates belonging to different stock groups with different VAT classifications. So in case the government changes tax rates for the stock items which are now grouped under sports equipment to another VAT rate, say for example 6% from April 10th, all you need to do is simply enter the new VAT rate along with the effective date in the classification masters. Now if you do enter a sales invoice on 10th of April and select a stock item, say for example cricket bat, which is under sports equipment group, you will see the tax is being calculated as per the new rates. Now on to a quick recap.
It is very easy to define one VAT rate for a group of items. If the business has several stock groups, each having items with the same VAT rate, just define the rate at the stock group level. There is no need to define it for each item. So when you enter transactions, the appropriate VAT rate is used. Different VAT ledgers need not be created, although if there is a requirement to do so, it can be done as well. This is very helpful when the rate changes for a group of items, and this facility of classification will enable you to change the rate in one go, saving time and effort. Users can make VAT rate changes on their own, hence, there is no requirement to provide stat releases for changes in tax rates. For changes in forms, they will be available through Tally Solutions, via capsules. Many businesses, especially in the retail segment, bill their goods inclusive of VAT. In such a scenario, customers would like to see the breakup of the item value and tax value. For example, if the price of an item is 100 rupees, and 5% VAT is included in this rate, the retailer will need to apply a formula 100 into 100 by 105, to arrive at item sales per assessable value, and 100 into 5 by 105, to arrive at tax value and manually enter it. The column rate inclusive of tax in the sales invoice ensures that this is automated. Let's see this powerful capability.
Let's create a new stock item and specify a VAT rate. Let's create a stock item called hand gloves. Enable Set Alter VAT Details and specify a VAT rate 10%. Let's see how this is handled in a sales transaction. In the sales voucher, click F12 Configure. In the voucher configuration screen, enable Provide Support for Inclusive of Tax for Stock Item option. Now let's record a sales transaction with a new stock item that we just created, which is hand gloves with a unique VAT rate of 10%. Enter the quantity and rate. As you can see, Tally will instantly calculate the actual rate exclusive of tax and display it. You can also select the VAT ledger for the tax amount to be displayed.
As we've seen, we simply need to enable the option of inclusive of tax in the sales invoice entry. No other step was required. And the breakup of item and VAT value gets done automatically. No manual calculation is needed. Invoicing becomes error-free, thereby saving time and effort. When the MRP of items is different in various states, it becomes necessary to handle VAT with state-wise MRP. Release 5.1 handles this complex situation in a very simple manner. Let us see how.
In the stock item creation screen, click F12 Configure. Enable the option Allow MRP Marginal for stock items. Let's create a stock item. Enable Set or Alter VAT Details. Enter the tax rate and set the option Calculate VAT on MRP to Yes. Save the screen and enable the option Set Alter MRP Details. In the MRP Details screen, press F12 Configure and enable the option Allow State-wise MRP. Enabling this helps you to define different price details for different states. Enter the date of applicability, select the state, and enter the price. And let's specify a different price for another state, say Tamil Nadu, and select the option Any from the list of states to specify a price for the rest of India. Let's record two sales transactions for parties in two different states. The first invoice will be for a sale to a party in Tamil Nadu. As you can see, this party is located in the state of Tamil Nadu. Press A Tax Analysis. As we can see, the MRP is automatically picked for calculation of VAT based on the customer's location or state, in this instance, Tamil Nadu. Now let's see how tax is automatically calculated for a sale to a party in Karnataka. As we can see, the MRP is automatically picked for calculation of VAT based on the customer's location or state, in this instance, Karnataka.
As we have seen in the demo, it was simple to set up VAT based on state-based MRP. In fact, we could set the MRP for the purpose of VAT and excise in one place, making it convenient for users. And, while making the sales invoice entry, the MRP will be picked up automatically, based on the customer's state. Let us now look at an advanced situation, the requirement of handling works contract. Works contract refers to a turnkey project, in which both goods and services are involved, and building needs to be done in a consolidated manner. For example, a roads contractor uses material to lay a road, but at the same time, he is delivering the service of laying a road. In such a situation, when he raises the invoice, he needs to bill one single amount under the head, road laying charges. And he needs to charge VAT on a portion of the amount, and service tax on the balance amount. It is a complex scenario, but easily handled by Tally. Let us see how.
Let's create a ledger, road laying charges, under Sales. Enable the option Set or Alter VAT Details. Select the nature of transaction as Sales Works Contract and enter the VAT rate as 10%. Now let's record a sales voucher. Click I Account Invoice. Select Universal Traders as the party name. Select the ledger Road Laying Charges and enter the amount. In the Deduction Claim for Tax Calculation screen, enter the deduction percentage, say 30%. Now select the VAT ledger. You can see that VAT has automatically been calculated on 70% of the sale value, that is 70,000. To view the tax analysis, click A Tax Analysis.
As we've seen in the demo, it was simple to set up the nature of transaction as works contract. And then enter the sales invoice normally, with just one addition, that is, entering the deduction percentage. And the VAT was calculated correctly on the sale value less deduction. This is another scenario, which is easily handled in Release 5.0. A very common requirement exists in the equipment renting business. For example, dealers of generator sets often give generators on rent. Under VAT laws, this renting out attracts VAT, and therefore, the dealer must charge VAT on his invoice. Let's see this in action.
Let's create a new company. To maintain only accounts, go to F11 Features, Accounting Features, and enable the option Maintain Accounts Only. To enable VAT, go to Statutory and Taxation, enable Value Added Tax, VAT, and save the screen. Now let's create a sales ledger. If different VAT rates are applicable for purchases and sales, then enter the VAT rates by enabling the option Set or Alter VAT Details to Yes. Enter the rate as 10%. Let's create a party account, Global Traders, under Sundry Debtors. Let's create a VAT ledger under Duties and Taxes. Enter type of duty as VAT. Now let's record a sales invoice. Select the sales ledger and the VAT ledger. You can see that the VAT amount gets calculated as per the rate defined in the sales ledger.
As we have seen in the demo, it was simple to set up VAT for a business which does not maintain inventory, and yet needs to charge VAT. Release 5.0 has been uniquely designed to handle some state-specific requirements. For Rajasthan, tax based on quantity is provided for businesses like granite and marble, where tax is calculated as per square feet of marble or granite. Similarly, in Delhi, tax based on rate slab has been provided to support businesses like shoe dealers, where VAT is 0 if rate of shoes is below Rs 500. However, there is specific tax percent, which is charged on shoes whose rate is above Rs 500 per pair. Let us see how this requirement has been handled in Tally.ERP9.
Let's see how VAT is calculated on quantity, which is a specific requirement for the state of Rajasthan. Let's create a company with the state selected as Rajasthan. Click F11 Features, Statutory and Taxation. Set the option Enable Value Added Tax VAT to Yes, and also enable the option Set or Alter VAT Details. Set Enable VAT on Quantity to Yes. Let's create a stock item, marble. In the field Units, press Alt-C to create the unit of measurement. Enter U in the symbol field and Units as the formal name. Enable Set or Alter VAT Details. Select the calculation type as on quantity and enter the tax rate as 100 per unit and save the ledger. Let us now record a sales invoice. Make sure that you have already created the required party ledger, sales and VAT ledgers. And also a point to note, for the sales ledger, the option Set or Alter VAT Details will have to be set to No. Let's select the party name, the sales ledger, and select marble as a stock item. Let's enter the quantity and the rate. Select the VAT ledger and click A Tax Analysis to view the tax details. Click F1 Detailed. You can now see that the VAT is calculated on quantity. Let us now see how VAT is calculated based on the price of an item, which is a specific requirement for Delhi. Create a company with a state selected as Delhi. Go to F11 F3 Statutory and set the option Enable VAT to Yes. Set the option Set or Alter VAT Details to Yes. In the company VAT details screen, let's enter a TIN and set the option Enable VAT on Stock Item Rate to Yes and save the screen. Now let's create a stock item. Enable the option Set or Alter VAT Details. Select On Item Rate as the calculation type. Let's take an example scenario. If the price of an item is 500 rupees or less, the tax rate would be 0%. For a price range of 501 to 900 rupees, the tax rate would be 5%. And for all other prices above 900 rupees, the tax rate would be 10%. So as per the scenario, let's enter 500 and select either exempt or tax-free as the tax type. Enter 900 in the Up To field and enter 5% as the tax rate. Retain 900 in the Greater Than field, enter the tax rate as 10% and save the screen. Save the stock item creation screen. Now let's record a sales transaction. Select the party's account name. Select the sales ledger. Now select the stock item and specify different prices. Enter 499 rupees for the first price range for which VAT will not be calculated. Enter 501 for the second price range for which tax will be calculated at 5%. And finally, enter 901 for the third price range for which tax will be calculated at 10%. Click A Tax Analysis to view the tax details. You can now see that the VAT is calculated based on the rate of the item.
So we have seen how simple it was to enable VAT for the two states. Based on the state specified at the company level, appropriate options are displayed in F11 features and in relevant masters. All we need to do is enable the options, define the applicable rates, and pass transactions to see that getting appropriately calculated. Simple.